Hey traders, the Chart Guys Swing Report newsletter is currently live. In the description of this video, there are two links. The first is to the sign up page where you can also get emailed an example of a previous copy. And the second is to an in-depth video to let you know exactly what the Swing Report entails. Appreciate your attention. Let's get on to the charts. Hey traders, so checking in, we had an interesting bearish reaction to the FOMC minutes. And apparently the market is reacting to them saying that there's going to be some significant economic impact from COVID. I guess that wasn't known. Anyway, we're pulling back and we held the low of yesterday for a double bottom bounce, but we're not getting a whole lot of bounce follow through at the moment. So futures are going to determine whether that support level holds and we bounce off of it, keeping the bulls in complete control, or whether we start to see a bit more significant consolidation. Aligning with this is the bounce in the dollar. And the dollar, in my opinion, is the holy grail of what we need to be watching right now. And the reason being, the very clear inverse reaction that everything has when the dollar bounces. So the dollar had a big green day today. We dropped to a lower low on the daily time frame, not a whole lot of follow through. On the current bounce, anything under 93.91 is just a daily lower high. But on this one solid green day for the dollar, metals pulled back really hard, crypto pulled back, stocks pulled back, and the dollar bulls really got their momentum. They started the day strong, but they got another solid leg up on the FOMC reaction at 2 p.m. Eastern. So again, we're paying very close attention to the dollar. We're looking back at the last 12 years with the weekly RSI bouncing at 28, 25.5, 27, 25, and at the low here, we were just getting down into the 29s. So historically speaking, over the last 12 years, we bounce at these levels. Question is, can we get follow through on the daily? And I was talking on the live stream with members about metals. And yes, there are potential entries for metals looking for daily higher lows, which we'll look at in just a second. But for me personally, I would be so much more comfortable entering bullish metals after a weekly bounce, knowing that we're just looking for the weekly lower high to be set on any dollar bounce. But again, knowing that that weekly bounce is likely coming any week now, I don't want to be entering long metals personally up at these levels. That being said, there is a clear stop level to use if you want to be a bit more aggressive than I want to be. I want to be cautious and patient. So that's what we're looking at for the dollar, all about 94. Forget 93.91 because 93.99 is the level right behind it. So let's just call it 94. If we can get over 94, it'll be notable that the shift in momentum on the daily time frame is finally underway. So SPY, if we break the double bottom at the low of the last 2 days, the line in the sand level for me short term is a daily higher low at 332, and we're currently about 1.5% above that level. IWM, daily inside bar today, but closed weak, and we're watching to see, do we lose the daily 12-period exponential support? Do we see a more notable pullback, which would mean zoom out and look for a weekly higher low to then form? Pretty much what we're watching for in all markets is it time for weekly consolidation? And I've been watching for that in crypto and USMJ and the broader market for a month at this point. And that's what we're still watching for. QQQ, all-time high today, but a close at the low of the day, losing the hourly uptrend. Look at the bear volume on the FOMC minutes reaction. So we did get a higher high, a new all-time high, and then we dropped down and broke the low of the day at that point, which means zoom out. Still holding the pattern of a higher low the last couple days. Short-term support 270.72. Can the bears take out the daily uptrend in QQQ? That's the question we have for the rest of August. Healthcare. Pretty much a triple top at the all-time high in the 107.80s. Anything above 105.13 is a daily higher low. That's the line in the sand level for me. Anything above that keeps the daily uptrend intact. Financial sector. This was notable, and this was a pretty brutal fake out. We were looking for a daily bounce to set a higher low. We were looking for a daily lower high to be the result of that bounce, and we were watching all of our laggards. And the morning started extremely strong for XLF. Look at that big bull move. XLF, cruises, airliners, big morning for the first half hour. And then zero follow through. As soon as you start to get to the third and fourth 5-minute candle of consolidation, you're starting to say, okay, this is a red flag. This is too much pullback. This does not favor continuation. I personally would have preferred to see maybe, 2-3 days of a bounce to then be looking for a bearish entry and playing off of this resistance level. Obviously, we didn't get that. We had a 30-minute bounce straight back to the bears. So that's too fast. Real aggressive bears were all over it, but too fast for me to be looking for bearish entries. I wanted more bounce follow through than that, but we didn't get it. And the bottom line is the bears are keeping control. The analogy I used in the chat room today is the laggard sectors have been sitting on the bench waiting to get called into the game for the last 4 or 5 days. They finally got called this morning, and they tripped and fell flat on their face and got injured before they made it onto the court. It's essentially how it's played out. So the bears are back in complete control of our laggard sectors, and you look at airliners, horrible follow through, weak close, and you look at cruises, and just a huge upper wick of profit taking and a weak close. RCL is clearly the stronger of the cruises, but not the good day for the laggards. And XLF is a part of that. XLF is a weekly equilibrium. High, low, and if you've been watching these videos for a couple months, you know we were looking at the most likely scenario as a weekly lower high. We've now gotten it, and we're then going to be looking for a higher low. This exact same pattern that had us anticipating a weekly lower high in XLF is the same reason that we were looking for gold to give us a daily lower high, which it did. Get comfortable with equilibriums. They are the most common pattern that you will see in trading on any time frame. And if you are comfortable with anticipating the most likely scenarios, again, I couldn't tell you where gold's going to set its lower high. Some traders use Fibonacci levels to help with that. I like to use the price trends on shorter term time frames to help with that. So I can't tell you exactly where it's going to happen, but I know what to be looking for. And if I know bigger picture what I'm looking for, and I can then zoom in and look for the clues that tell me that bigger picture is indeed playing out, that's when we can start to impress people that don't know much about technical analysis who think you have a crystal ball. So for XLF now, we're looking for a weekly higher low compared to 2249 for this tightening weekly range, and that could play out for another 4 to 8 weeks even. Biotech sector, daily equilibrium. High, low, lower high, held support, looking like maybe a lower high. Inside bar today, if it breaks bearish, that lower high is set, and we then look for a higher low compared to 108.19. Tightening daily range. Semiconductors starting daily consolidation. 166.74 is the line in the sand level for me. Anything above that maintains the daily uptrend. That is our support level. So clearly consolidating, little uptick in bear volume, but 166.74 is the important level. So we can clearly say after today, consolidation is underway in a lot of names and a lot of sectors, but daily uptrends are still intact in a lot of names and a lot of sectors. And what I need to see is notable bear volume. Yes, we got some spike in bear volume today, but if you look back, the past few days where we get bear volume spikes, it's in a very limited window. Today it was just at the end of the day. What I'm looking for is a day that is controlled by the bears that has high volume, 85 million plus shares traded. That will be notable for me when that happens because it has not happened in weeks. What will also be notable is a loss of this daily 12-period exponential support, which has been holding very clearly at this point for 1.5 months. The VIX. So this is how I would draw the falling wedge based on candle closes. No candle is closing below my support line, and no candle is closing above my resistance line. Drawing it this way, we are just now breaking out of this wedge. That being said, we are still in a daily lower high pattern looking at price levels. So this for me is your initial heads up, but I need to see a break of 2360 and 2490 to be convinced. So if I'm an aggressive bull in the volatility sector, I enter on this signal, I put my stop under the low, but I don't have confidence until these other resistance levels break. Some other people could draw a trend line and still have us within this range still. But the way I do it, we are just breaking now. Can the bears follow through? That's what we're looking for tonight in the S&P 500 futures chart. 4-hour time frame was a bit of a rising wedge that finally broke bearish. We've had a lot of rising wedges on a lot of names recently. Not a ton of bear follow through, but here's one. Definitely bear follow through. Gold, daily lower high set, equilibrium tightening up. What would indicate odds increasing that we can drop to a lower low and confirm a daily downtrend? Bear volume, keep that bear volume up, and it can. And the dollar bounce. If the dollar breaks 94, I expect to break this support level of 1862. If the dollar forms a daily lower high compared to 94, I anticipate that we will form a daily higher low compared to 1862 and see a tightening range into the end of August. If I'm an aggressive bull, I am scaling into entries, maybe 2 or 3 entries, and using that level of 1862 as a stop, giving a bit of wiggle room. If I am patient, I'm waiting for weekly consolidation, which is starting on gold, but has not started on silver. Silver is the same thing, daily lower high is set. We have to drop double-digit percent for a bear break on silver. We have to drop 4% for a bear break on gold. So silver, we're watching for a higher low compared to 23.44. Silver has not seen weekly consolidation. I guess we had a little lower wick there, but no real weekly consolidation in about 2.5 months. And if you look at the miners, it's the same. Daily lower high has been set. Week close, all about 38.89. Aggressive bulls are scaling in a couple orders and using that level as a stop. Patient bulls, maybe waiting for a bit more weekly consolidation. Again, in my opinion, how the metals are going to consolidate here and how prolonged that consolidation will be is completely dependent on the dollar. Oil, inventory report, didn't do anything. Pretty much multiple inside bars in a row. Daily higher lows, 41.93 holding. And pretty much boring. And bulls keeping control as long as 41.93 holds. Daily uptrend is the most important factor. And that's one thing that's notable. I'm wondering if the the inventory report offset things a little bit or shifted correlations, because I would expect if you show me the dollar, SPY, gold, silver, and Bitcoin today, and you say, what's oil doing? I'd say red day. And it's not. Well, I guess it is actually. It is a red day, but I would expect a bit more of a red day. This is deceiving because it's just showing us this candle that we are higher than where we opened, but we are still under where we closed yesterday. Natural gas bulls keeping control. Daily inside bar. If we lose the 4-hour 12-period exponential support, which has been a great visual guide, we then zoom out and look for a daily high or low, anything over 205. Resistance after 244. We'll look at 250 psychological. So that's where we stand. I didn't do much today. It was a fairly slow day overall to start the morning. I did enter a QQQ bearish position that I stopped out of. I did a couple trades. What did I do? OSTK bounce, little win. So some small wins and small losses. But I lost a streak. I was on 11 days in a row of accounts at all-time highs, just getting those base hits one step forward every day. And I lost it today. I lost $3. And it was when the bell rang. I do have a VFF swing position that I entered with my stop under the low of today. If we closed at 508, the streak would have been alive. We were at 508. In the last 5 minutes of trading, and then in the last 5 seconds, it ticked down a penny, and the streak was broken by less than $3. So that doesn't matter at all in the slightest. It has no meaning whatsoever, but it was fun. It entertained me at the end of the day, and that's important. Have a good rest of your day. We'll see you tomorrow. This is what they're supposed to look like. So this is after the melon turns yellow, and I thought this one was rotted, but these seeds get these, it looks like almost little hearts, and they're just these little goo jelly delicious things, and you suck the goo off and then you got a seed. So this is what I remember them being, and I was pretty confused at the ones that I was getting that were still green. So I'm going to try and let the ones that are still on the vine turn yellow, and I will save these seeds and we'll see what we get. This is what they're supposed to look like. So this is after the melon turns yellow, and I thought this one was rotted, but these seeds get these, it looks like almost little hearts, and they're just these little goo jelly delicious things, and you suck the goo off and then you got a seed. So this is what I remember them being, and I was pretty confused at the ones that I was getting that were still green. So I'm going to try and let the ones that are still on the vine turn yellow, and I will save these seeds and we'll see what we get.